Nice to meet you. From now on, every Monday we will be updating the FX market response, an overview of foreign exchange market pressures. We have created this to help you visualize how a country's currency is viewed from the world's perspective, following the true meaning of the proverb, seeing the trees but not the forest. As this is the first installment, we are having serious problems with the way we express it. There is also little information available, making for an abrupt start. We will continue to improve with each update. Here we present the FX market response, updated on February 2nd. Here we capture exchange rate pressures for 50 currency pairs, using the inherent buying or selling pressure of each currency in the market. Market rate fluctuations are determined by the differential pressure between the two currencies. The technique for revealing this is called rate decomposition, and it also captures market correlations. However, the differential pressure between currencies, which is a comprehensive average, does not correspond to the volatility of market rates. However, it can remove rate noise and capture core trends. Here are the rules. 1. RINDEX, the inherent buying or selling pressure in a currency market. It is the comprehensive average volatility rate based on closing prices as of December 31, 2019. See the website for the calculation formula. 2. RINDEX pair. The difference between two currency pressure values determines the actual rate. This calculation includes PTN1, sell versus sell, PTN2, buy versus buy, and PTN3, buy versus sell. The resulting value splits the two currencies into a sell and a buy position. This is called differential arbitrage. The RINDEX pair and the actual rate will not match. This difference is called rate noise. 3. Expression of pressure. Selling pressure is a positive percentage from the base, and the chart line moves upward, so it is expressed as selling up. Conversely, buying pressure is a negative percentage from the base, and the chart line moves downward, so it is expressed as, quote, buying down. 4. A note about the chart timeline. The rightmost point on the chart's x-axis represents the weekend values for the past 4 weeks. The remaining 12 measurements on the left represent the last weekend values of each month. 5. Common pressure criteria include the start of the month, the previous weekend, and the end of the month. This confirmation will be displayed repeatedly. Please note that the website provides a more detailed explanation. Please be sure to read it. This is a table of RINDEX pairs and current dollar straight rates. The red box on the left is a chart of major currencies. These 5 pressure correlations are called the core correlations in the foreign exchange market and form the basis for the grand correlations of other minor currencies. The basis for core correlation is the RINDEX for the dollar. Dollar pressure continued to rise on the 30th of last week. As for the RINDEX for other major currencies, the euro was sold slightly, and the pound was also sold slightly. The yuan was sold, while the Japanese yen was bought down. This results in a core correlation between the dollar and the euro, pound, and yuan, with only the Japanese yen being inversely correlated. Next time, we will further break down this correlation using the PTN method. Now let's look at the euro pressure table, which we're focusing on. We observed a small sell-off last weekend on the 30th. The buy-off that has been occurring since March of last year has become the norm. We conclude that this is a repatriation of currency. However, it has continued for more than 10 months. Now let's look at the weekly pressure on the euro for other major currencies. The dollar is selling off. The pound is also selling slightly off. The yuan is selling off, and the Japanese yen is buying down. Now let's look at the major correlations for the pound. Last week, the pound's weekly pressure was stagnant at 0.02%. The dollar's weekly pressure against the euro was selling at 0.83%, and the actual rate was buying down at -0.63%. The euro's weekly pressure was stagnant at 0.02%, and the actual rate is also stagnant. The yuan's weekly pressure was selling up at 0.56%, and the actual rate is buying down. The Japanese yen's weekly pressure was buying down, and the actual yen-pound rate is selling up. The pound's core correlations were positive with the dollar, euro, and yuan, and negative with the Japanese yen only. Next is the renminbi pressure table. Last week's weekly pressure was a sell-off of 0.56%. Dollar pressure was a sell-off, while the market was a buy-off. The euro was sold and the market was also sold. The pound was sold and the market was also sold. The Japanese yen was bought down and the market was sold up. The renminbi's weekly core correlation is a positive correlation with the dollar, euro, and pound, and an inverse correlation with the Japanese yen. Finally, we have the weekly core correlation for the Japanese yen. Let's now look at the weekly pressure and actual rates of major currencies against the yen. The Japanese yen itself is down -0.58%. The dollar is selling, and the actual rate is buying down. The euro is stagnant selling, and the actual rate is selling sharply up. The pound is stagnant selling, and the actual rate is buying down. The yuan is selling, and the actual rate is buying sharply down. The core correlation for the Japanese yen ends up being anti-correlated with all major currencies: the dollar, euro, pound, and yuan. As you can see, the core correlation is consistent in terms of pressure, but there is a discrepancy in the actual rates. We can organize our thoughts about this using the PTN method, which we will introduce next time. We offer paid downloadable files for printing and saving for practical and research purposes. Please purchase from the URL in the details below the video. Thanks for watching. Taro Tanabe reported from Japan. Have a great week.